Hello friends, welcome to my channel Financial Fitness with CA Ashima Abel Yunus. In this video, I will throw some light on how RNOR status works, and I will also give you some tips for tax planning with the help of some examples for NRIs who return to India. So make sure you watch this video to the end so that you can understand how RNOR status works in different scenarios. Well, RNOR stands for resident but not ordinarily resident. To understand what is RNOR status, you can watch part 1 of this series where I have explained in detail how to check your residential status and what is RNOR status. To understand the tax benefits that comes with RNOR status, you can also watch part 2 of this series. You can find the link of these videos in the description box below or in the I button above or on the end screen of this video. But before we begin, I would request you all to please subscribe to my YouTube channel. It's totally free. You can just log in on YouTube with your email ID and click on the subscribe and like icon, and do share it with your family and friends so they can also benefit from it. You can also share it in the WhatsApp groups in your phones. I will just take a quick pause for 5 seconds so you all can take time to click on subscribe icon, and also you can click on the bell icon that you will find below the video. Please do that while I wait. Okay, so now I'll quickly introduce myself for the new viewers on my channel. Here I am, CA Ashima, a professionally qualified chartered accountant and a certified auditor. I have worked as a partner and a director with one of the top 25 leading CA firms in India, which has also been a member firm of one of the big fours. After working in India for a period of 10 years, I moved to Sweden and have also worked as a senior financial consultant with a multinational and catered to clients in Sweden, Finland, Norway, Denmark, and the United Kingdom. I have also worked as a freelance financial consultant. In order to understand how RNOR status works, first it's important to understand what is RNOR. Although I explained it in my previous video in part 1 of this RNOR series, I will briefly explain it for a better understanding with the help of some examples so you can understand the case studies as well. We are usually aware of the rules that govern resident and non-resident tax status, but rarely we get to understand to whom the RNOR status applies. According to the Income Tax Act 1961, an individual can qualify as an RNOR if they meet certain criteria regarding their stay and income sources in India. So I will explain you the eligibility criteria of RNOR status. To qualify as an RNOR, an individual must meet at least one of the three conditions in a particular financial year. The first one is if the individual has been a non-resident in India for 9 out of 10 preceding financial years, or the second is if the individual has during the 7 preceding financial years been in India for a total of 729 days or less, or if your taxable income in India exceeds rupees 15 lakhs and you have stayed in India for 120 days or more, but less than 182 days, depending on your date of return to India. You can benefit from this special tax status if any one of these conditions are satisfied. Now let's understand how does RNOR work. Let us go through some cases to understand how RNR status actually works. You must already be aware that Indian tax year, usually referred to as financial year, is from the April of the current year to the March of the succeeding year. Let's take the first example. Let's look at the first case study. We can assume Mr. A returns to India on 20th December 2022, having spent 14 years in the EU. For the financial year 2022-23, he qualifies for RNOR status as he satisfies one of the clauses of RNOR status, that is, being a non-resident for 9 out of the previous 10 financial years. For the financial year 23-24, he would still qualify for RNOR even though he has spent more than 182 days in India. This is because he satisfies the other clause of qualifying for RNOR status, which is having spent less than 729 days in India in the previous 7 financial years. For financial year 24-25, his tax status would change to resident, as he would not satisfy either of the clauses of RNOR. Let's take another example. Let's look at the case study 2. Assume Mr. B returns to India on 15th of May 2022, having spent only 6 years in the US. For financial year 22-23, he qualifies as a resident for tax purpose, as he does not satisfy any of the clauses of RNOR status, and also has stayed in India for more than 182 days in a financial year. Therefore, he will not be eligible for RNOR status and would not get the benefits that come with RNOR status. Now let's understand, how does one move out of RNOR tax status? Your tax status will change to resident on its own the moment you don't satisfy any of the clauses defined for RNOR. When you become a resident for tax purpose, you will lose all the privileges that an NRI can get. You have to immediately inform your bank about it and convert all your NE or NO accounts to resident accounts. Henceforth, income earned from abroad from all sources is taxed as foreign income. If you intend to settle down in India permanently, it makes sense to move your offshore assets to India within the period you are under RNOR status to avoid high tax liability. Now that you are aware of how RNOR status works, when you qualify as RNOR, it will be good to know the tax benefits that comes with it. To know more about this and to understand what is RNOR status, you can watch part 1 of this series where I have explained in detail how to check your residential status and what are the eligibility criteria for RNOR. To understand the tax benefits that comes with RNOR, you can also watch part 2 of this series. To know more about how to move your assets in a tax efficient manner and to know about the benefits of RFC, which is Resident Foreign Currency Account, you can also watch my next video, which will be part 4 of this series. You can find the link of these videos in the description box below or in the I button above or towards the end of this video. So friends, now it's time to wrap up this video, and I hope you all will benefit with the information shared in this video, and I hope you like the contents of the video. I request all of you to please do subscribe right now. You just need to log in with your email ID on YouTube to subscribe. That's it. It's totally free for all. So please do it right now. Subscribe, like, and share it with your family and friends and near and dear ones. You can also share it in the WhatsApp groups in your phone as well. Also, post your comments and give your valuable feedback for this video in the comments section. Thank you and bye-bye.